The Bank for International Settlements, the central bank of central banks. 1. Origins of the BIS. The Bank for International Settlements, BIS, was founded in 1930 in Basel, Switzerland, under the pretext of facilitating reparations from Germany following World War I. Unlike the IMF or the World Bank, which emerged later, the BIS predates modern multilateral financial institutions and operates with unique privileges under international treaty law. Though originally European in scope, its influence quickly expanded. Today, the BIS represents roughly 95% of global GDP, functioning as both a meeting ground for monetary elites and a depository of central bank reserves. Footnote: the BIS was established in 1930 to manage German reparations but evolved into a global central banking hub. 2. Secrecy and legal immunity. The BIS is shielded by extraordinary immunities. Its treaty status exempts it from local laws, taxation, and seizure of assets. Swiss authorities cannot enter its premises without prior consent. Meeting records remain undisclosed, and even attendance lists of its bi-monthly gatherings of global central bankers are withheld from the public. Thus, the BIS combines the opacity of a private institution with the protections of a sovereign embassy. This duality, half bank, half intergovernmental organization, permits actions without accountability. Footnote: the BIS operates under treaty-based immunity, exempt from ordinary legal oversight. 3. Financial functions of the BIS. The BIS manages between 10 and 15% of central bank reserves, positioning itself as both custodian and counterparty to national monetary authorities. It also became the first non-member body allowed to hold and use International Monetary Fund special drawing rights, SDRs, as reserve assets. These functions blur the line between policy coordination and private banking activity, leaving its exact nature, international organization or financial institution, intentionally ambiguous. Footnote: the BIS holds a significant portion of global central bank reserves while enjoying intergovernmental privileges. 4. The current agenda, a unified monetary ledger. In its blueprint Improving the Old, Enabling the New, the BIS advocates a global central bank digital currency, CBDC, operating on a single unified ledger. The stated rationale is to overcome silos in the financial system. In reality, such a ledger would permit real-time surveillance of all transactions and subject global finance to a singular point of technological and legal control. Augustin Carstens, BIS General Manager, has declared that central banks must retain absolute control over such a system. Footnote: the BIS blueprint proposes a global CBDC under centralized surveillance and control. 5. Risks of surveillance and control. Unlike gold, which cannot be manipulated by decree, a BIS-operated unified ledger would embed programmability into money itself. Expenditures could be approved or denied by policy decision. Privacy would cease to exist. The legal and diplomatic immunities of the BIS mean such controls could be imposed without recourse to local legislatures or courts. Thus, the proposal amounts to an unprecedented concentration of financial power. Footnote: a BIS-controlled ledger would eliminate transactional privacy and bypass democratic oversight. 6. Countermeasures, assets outside their system. While individuals cannot alter BIS policy, they can safeguard wealth in forms beyond institutional control. Historically, gold and silver have served as hedges against systemic overreach. Decentralized assets likewise challenge centralized structures, though BIS officials explicitly discredit them. The lesson is not resistance through confrontation, but resilience through independence. Ownership of assets beyond the reach of immunized institutions remains the primary legal and practical safeguard. Footnote: protection requires holding assets outside centralized financial control, such as physical gold.